Ladies and gentlemen, welcome back to the channel. Here in today's episode, I'm going to go over with you all of your big news today. The jobs report, the unemployment rate, what Wall Street is saying about this, but most importantly, the reaction to this was surprisingly much better than I would have expected it to be. And I think there's some strong signs in my theory coming true. If you don't know, I think October, November, December, specifically like mid-October through the end of this year, is going to be one of the best 2.5, 3 month periods we've seen in the markets in a very long time. Okay, September could be a weak month, could be a bit choppy, but I'm impressed with what I've seen today. We're going to go over all of this in today's episode. Now, as you know, Tesla had big news today. The stock was up big today, and I think this is exactly what we needed for Tesla to go through a pretty epic end of the year rally and an even better 2026. And we'll break that down in this video as well. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of the video if you want to come join the trading community, where we are going out and finding small cap AI stocks in a once in a lifetime opportunity to grow wealth. I think there's no strategy that is even close to rivaling what we are doing. And the proof is there. The portfolio that I set up specifically for the trading community is up 97.28% year to date. Again, this strategy is pretty simple. We're going out, finding the AI stocks in the small cap area that are not seen or paid attention to, okay? We're taking on positions. What happens is Wall Street, they typically take on positions next. And then finally, retail. Whether it's Nvidia buys a stake in the company, or Cathie Wood, invests in the company, or XYZ, whatever the catalyst is that puts that company on, we're going out and investing in those stocks first. That's where you get the massive upside potential, and I think less of that downside risk. If you can spot the legitimate opportunity in the small companies in AI before everyone else does, I think you can take on a massive upside potential with limited downside risk. Again, if you're investing in zombie companies, you're going to take on way too much risk. We don't do that. We invest in high quality companies that Wall Street does not understand or know of yet. That's why we can get these outsized returns with, and I believe, a limited downside risk potential. That's my view. I'm not a financial advisor. I'm not a financial planner. If you blindly copy and paste what someone else does and you do not understand the companies you are investing in, you will 100% lose money. I have seen people that invest in the stocks that we're investing in, don't understand them, just blindly copy. I've watched these stocks go down 10% in a day. People sell out, they get angry. Next day later, stocks up 14% or 20% or 30% in a week. And they're like, what the hell happened? And now they just missed out on a 50% gain because they didn't understand the company they were investing in. This is not financial advice, not a recommendation. You will lose money if you blindly copy and paste whatever anyone else does. But if you guys want to come join the best trading community in the world, in my view, check that link out down below in the description of this video. I mean, we have members like No, that's up like 600% year to date. Another individual, MTH, something like that. The name's kind of difficult to spitball off the top of my head. Up like, what was it, like 500% today? 800%, something crazy. Okay, shout out to you guys. You guys are incredible, blowing my returns out the water. Okay, if you want to get involved in the community, link down below in the description of today's episode. First things first, let's get into the raw numbers here. So non-farm payrolls for last month came in at 73,000. You got revised up to 79,000. Okay, now the numbers for June were 14,000 positive. They were revised negative to negative 13,000. So the June revision is pretty rough, technically negative, but last month's revision was actually slightly positive. Now, the expectation for the jobs number today was 75,000. We came in at 22,000. Yeah, that's not great. Okay, not great at all. Unemployment rate was expected to rise from 4.2% to 4.3%. We did rise to 4.3%. Okay, so unemployment rate came in line with expectations, but the headline jobs number came in pretty bad. Now, good news, participation rate did go up a little bit to 62.3 when previously it was 62.2 and expected to be 62.1. Average hourly earnings month over month came in line with expectations at 0.3%. Average hourly earnings year over year came in at 3.7%, in line with expectations. So that was the big catalyst today. That's really what everyone has been preparing for this whole week, was the jobs report. And again, honestly, I'm impressed that the Russell's green today. The NASDAQ basically unchanged, down 0.15%, but not much at all. S&P's down 0.5%. That's more of an expected reaction. But honestly, I'm impressed. Because why? As I've talked about on this channel many times now, I sound like I'm beating a dead horse here, but just for the sake of this video, I will do it again for anyone that has not heard this. What do you think? Like, do you think rate cuts are bullish or bearish? Just ask, just like generally, are they bullish or bearish? What if I told you rate cuts are neither bullish or bearish for stocks? Neither good or bad. The reason why the Fed is cutting rates is bullish or bearish. Rate cuts in and of themselves are not. Okay, here's the deal, and here's why that is. If the Fed is cutting rates because inflation's falling, because the economy is doing okay, and they want to prevent further weakness in the economy, that can be seen as a positive. In that scenario, rate cuts could be a positive for stocks. In the adverse scenario, that the economy starts to tank, labor markets start to tank, a crisis is brewing, rate cuts are not good. Okay? So not just the Fed cutting rates, but it's the reason why the Fed is cutting rates. Now, obviously, after a jobs report like today, the odds of Fed cuts are skyrocketing. Okay? You now have a 10.3% chance of a 50 basis point rate cut September 17th. An 89.7% chance or 92.1% chance of one rate cut. So yeah, that's a bit of a change. Okay, for October 29th, there is a 78.8% chance of another cut. So almost a certainty that you get a cut in September and a cut in October. For December 10th, almost a certainty that you get another cut at 70.1%. And these odds really skyrocketed today. The odds of the third cut December 10th yesterday were 46.4%. Today, 70.1%. So this jobs report today really boosted the odds of rate cuts. What I'm so impressed with, and what I think is important to understand, is even though we got a bad jobs report today, Wall Street is not panicking. It seems like to me, via the Russell, being kind of green today, at least was green, partially green, Wall Street is saying Fed cuts could help stabilize and support the markets. Basically, that the Fed is not late, that we don't have some kind of huge economic problem, even though we got a bad jobs report. It's not like we're hurtling into a recession. That's at least what the markets seem like they are implying today. With these revisions over the last 2 months, employment in June and July combined is 21,000 jobs lower than previously reported. And you can see today 10-year Treasury yields are down 10 basis points to 4.076%. You can see here, breaking news, mortgage rates see the biggest one-day drop in over a year. The average rate on the 30-year fixed mortgage dropped 16 basis points to 6.29% on Friday. This is a major change from May, when the rate on the 30-year fixed peaked at 7.08%. So yeah, this is good for getting the consumer some relief on the rate side. Now, Goldman Sachs says by the September dip, Goldman Sachs macro trader Paolo Schiavone advises buying September's stock dip, predicting the S&P 500 could climb to 6,700 to 6,900 as rate cuts boost growth. A note issued before the latest jobs report, he said markets are already pricing in a Fed cutting cycle that will spur economic reacceleration. August jobs growth was just 22,000 versus 75,000 expected, with unemployment at 4.3%. The weak data pushed the dollar lower, yields down, and stocks higher. Schiavone sees the Fed's long-run rate near 3%, similar to the ECB, and expects stretched valuations in credit and equities to persist. He recommends owning rates volatility, buying equity dips, and watching NASDAQ and Russell indexes for signals. So, in big news today, Saudi Arabia wants OPEC Plus to speed up the next oil production boost. Why this is good is because more supply means lower prices. And lower prices, I mean, for like the economy is massive. I mean, like, oil single-handedly is the biggest single driver to economic activity. If gas goes up $1 a barrel, that's a huge drag on the consumer, by and large, because everyone uses it. Okay, if gas goes down $1 a gallon, that's a big boost, and more production means gas prices should fall. On the Bureau of Labor Statistics numbers today, he says real numbers will be in a year from now. White House senior advisor Hassett on the U.S. economy says we have to look at the whole portfolio of numbers. He says on the jobs data, it was a bit of a disappointment. He says that he expects the U.S. job numbers will revise up. And he says the jobs number is likely to be revised up by almost 70,000 jobs. Hassett says that the economy is prepared for tariffs. And he says the housing sector is still a disappointment. He also says that investments in the U.S. will drive incomes higher. And Hassett on the Fed says there's a lot of reasons for optimism. And Hassett on wages says they could offset inflation. He also says an independent Fed is really important. U.S. Senate Democratic leader Schumer says Democrats will force votes in coming weeks to reverse Trump's import tariffs, citing Friday's jobs report as a reason. White House senior advisor Hassett says that the deficit scenario is looking optimistic. He also says that Trump knows we're optimistic about future of jobs numbers. Hassett on the jobs data says inflation is low and economic growth is solid. He also says that we need to do a better job of adjusting data. Revisions have been huge. And Hassett on the Fed says that he expects they will discuss a larger cut. He says there is a connection with jobs and immigration enforcement actions. He says that he is confident that native-born workers are replacing illegal workers. Bank of America now sees 2 2025 rate cuts versus none previously. U.S. Labor Secretary Chavez Duramer says it is past the time for the Fed to act. He calls on the Fed to lower interest rates. And the unemployment rate is now 4.3%, the highest since 2021. Trump says that Powell should have lowered rates long ago. Canada's Prime Minister Carney unveils a relief package for tariff-hit sectors. The US is getting ready to start a renegotiation of its largest free trade deal, the US-Mexico-Canada agreement, per the Wall Street Journal. 15 counterparties take $20.997 billion at the Fed reverse repo operation. This is something that has got a lot more attention recently as the numbers have really started to dwindle. What this means is there's a lot less excess reserves in the banking system right now. And as these reserves stay at these low levels and presumably go even lower into the future, then it's going to mean the Fed, it's not going to be able to do as much, let's say, quantitative tightening. They're not going to be able to reduce their balance sheet as much. They may have to slow down or even buy assets if these numbers go too low, which historically the Fed buying assets leads to prices in all assets going higher, like stocks. And in an unconfirmed report, Trump is reportedly considering blocking U.S. tech companies from outsourcing jobs to India. I mean, there's a lot of that happens. Treasury Secretary Bessent says the Fed must scale back the distortions it causes in the economy. He says the Fed forecast relied on flawed models, and he says that the Fed must change course. Bessent says when the Trump administration shifted towards tax cuts and deregulation, the Fed's forecasts were too pessimistic. And Bessent says the central bank must recommit to maintaining the confidence of the American people. The CNN Fear and Greed Index today is sitting at 52, which is almost exactly neutral. So, stocks are no longer like overextended from at least a sentiment perspective. There's a lot of bears out there or people that are not nearly as bullish as they were before. Market momentum is neutral. Stock price strength, extreme greed. Stock price breadth is greed. Put and call options in greed. Market volatility is neutral. Safe haven demand is fear, and junk bond demand currently in fear. The most recent AI investor sentiment survey also highlights this, with bullish investors at 32.7%, down about 2% from last week. Neutral investors down about 2% from last week as well, going from 26% to 23.9%, and bearish investors up about 4% from last week, going from 39.4% to 43.4%. So bears are the dominant force out there, and that means there's upside for stocks. What's also interesting today, if you look at the percent of stocks trading above their 50-day moving average, even though indexes are trading lower today, you're actually slightly green. So internally in markets, it's actually not like a terrible day. Not like you'd expect if you looked at the headline S&P that was down about 0.5% today. Now, if you look at some big tech names, Palantir down 2%, Microsoft down about 2.5%, Nvidia is down 3%, Amazon down 1%. Most of the heavy, lifting, if you will, to the downside today in the S&P is big tech, which honestly is a good thing to see. People are selling big tech. They're going into more of your small cap names, your unloved areas of the markets, which I think is healthy. And again, with Tesla stock, I think what Tesla did today, the massive outperformance Tesla had, again, relative to even other stocks. Amazon was down 1%, Nvidia down 3%, Microsoft down 3%, just to name a few. Tesla up 4% today? That's massive. Okay, what I think is going to happen is Wall Street is going to start positioning into Tesla. They're going to start leaning into Tesla. Okay, because keep in mind, Wall Street has paid little to no attention to Tesla's AI efforts. They care about the auto business. There is only one tier specifically in Elon's comp package that has anything to do with vehicle sales, and that is Tesla hitting 20 million vehicle deliveries. Like, this comp package is pretty much all about AI and growing profitability, which will be AI driven. It will not be the auto business that gives us 400 billion in adjusted EBITDA. So this is like totally perversely different than Wall Street's view of Tesla. And I think it starts a broader trend of Wall Street starting to pay attention to what Tesla is doing in the AI space. Okay. And I think this really helps power the end of the year rally. Again, as inflation comes down, as the economy strengthens, as uncertainty gets alleviated around tariffs and geopolitical tensions, as we get rate cuts, as we focus on AI, as real estate starts to pick up, and even auto sales as rates come down. Autos are very much benefited from lower interest rates. All of this is coming together as like a hurricane of good, positive event catalyst for Tesla. That's the simple fact of the matter. There's no other way to put it. We're setting up, I think, for a very strong end of the year rally for Tesla. I think Tesla could end this year over $500 a share. I know. Crazy, right? That would be a pretty incredible rally into the end of this year for Tesla, which roughly eyeballing it here would be a 41.5% move. But again, Tesla's going to sell Optimus robots next year. Wall Street's not pricing that in. Tesla could grow to be thousands and thousands of robotaxis next year. Wall Street's not pricing that in. Tesla just opened the robotaxi app in Canada. There's no robotaxi operations in Canada yet. They're paving the way for that. Pretty good indication that is coming. And many other cities in the US. I mean, I can make an hour, 2 hour long video on just this alone, but to spare you the time, the simple version is what I just gave you. I believe Tesla is about to go through a massive year-end rally. I think the markets are about to go through a massive year-end rally. Maybe not specifically in big tech like you're seeing today, but I think a broad market rally is coming, specifically tailored around AI. I think AI software is also one of the best places to invest right now. Specifically AI, like small cap software. No, but that is where I think the cream of the crop opportunity is right now. And then you get into real world AI. There's going to be a wave of real world AI that Tesla is completely dominating in. I don't even know what the next best competitor to Tesla in terms of real world AI would be. Is it Figure? Is it Boston Dynamics? That aren't even publicly traded companies. Yet have nothing even close to Tesla in terms of real world AI. Tesla is doing real world AI right now with robotaxis. Soon to be Optimus. And this was just so far off of Wall Street's radar, it's a big shock that I think is going to pay dividends in the months to come. Hit that like button and subscribe to the channel if you have not done so already. Keep in mind, September is a weak seasonal period, so anything can happen. Don't be surprised if stocks do fall. But what I'm saying, the information that you are, seeing in these videos every day, specifically on a day like today, is going to come back and be a massive positive catalyst and or tailwind for Tesla stock. I am confident in that. So, ladies and gentlemen, that is it. Enjoy your weekend. Check out that link down below in the description of today's episode if you want to come join the trading community. Again, by far the best community in the entire world, in my view. Keep in mind, though, if you do join that, you have to link your Discord on Patreon for the automatic bot to invite you and for the links to work over there. Okay, there's no other way around it. On mobile, it's harder to do. On a computer, it's very easy. On a computer, you go to settings, you go to apps, you log into your Discord, boom, that's it. On mobile, it's a little bit more difficult. So I get a lot of questions like, how do I link? It's pretty simple on a computer. If you can get to a computer, it's going to make life a lot easier. All you got to do is link it once. Okay, if not on mobile, it's a little bit harder to explain, but it's possible on mobile as well. So that's the only one thing I get a lot of questions on, and hopefully that makes it a little bit easier if you guys do join. Takes 10 seconds on a computer, a little bit longer on your phone, but 10 seconds on a computer. So that is it, ladies and gentlemen. Have a great rest of your day. Look forward to seeing you guys over there and discussing all of this in more depth over there. Have a great weekend, and I will see you in the next one.